welcome back to Brashonomics. Scott Monroe stuck around to talk with Ryan, Leopold, and myself. Now, Scott, you had mentioned a lot of people are looking for first-time homebuyer programs, different type of loan scenarios that maybe seem inexpensive. And, Ryan Leopold joins us from Cobalt Mortgage. Ryan, maybe just speak a little bit to just an overview of when people ask for a first-time homebuyer program, what that truly means, because it's kind of a misconception that there's a first-time homebuyer program.
It really is. I think first, any buyer that comes in the market, expect that you're going to need either something as a down payment, or you're going to have to come up with some kind of money at closing. Anywhere between 3.5% to 5%, I think, is a fair estimate coming in as a new buyer. But there are different loan programs out there, and I think more than anything else, once you get into the details of them, a lot of them are really just used as a marketing ploy to get the phone to ring. Okay. So whether it be state bond programs that allow you to come in with 0% down, or USDA or anything VA, there's programs out there, but they're few and far between, especially with the way they used to be in the past. So
especially
really look
in this
into details.
area too. I mean, there's in the core of Seattle, I mean, USDA doesn't really reply. There's not a ton of VA loans done, in the greater Seattle area. Scott, what are some of your clients, asking you? I know you guys are put on the hook a little bit for mortgage questions quite a bit.
We really are, and a lot of the buyers, typically when they say, is there a first-time buyer program out there or whatever, to me that means they don't have any money, and they're
the
looking,
best kind of buyer. Yeah,
absolutely. And so you're trying to find out, okay, what are they really looking for, and what are they trying to do? And one of the things that I've found, whether it's the HUD homes or whatever, some of the programs out there are really smoke and mirrors, and they're really not the best deal for the buyer. But it's very difficult sometimes educating the buyer, and that's where it really is important to have somebody that knows their stuff in the mortgage industry that can kind of gently steer them towards maybe a way better program, even though it may not be what they think it is. But I find a lot of those are a bait-and-switch program.
Yeah, even when you get into the details of any kind of program, it often makes more sense to, let's just say you're coming as a low-down program like FHA, and FHA is really expensive money, and people
Super
think
expensive.
So what you want to do is look at, and as you meet with a lender and you go through your options, make sure that they don't guide you in one direction without clearly articulating the other options and alternatives that are in the marketplace. So if you look at FHA at 3.5% down, you look at maybe conventional with 5% down, or there's even 3% conventional programs. Look at the difference to see, hey, maybe it's worth going in the direction B as opposed to direction A. Because a lot of lenders will get tunnel vision. They'll go in one direction for a client and not share other options and lead people down the wrong track.
So one of the things I was wondering from you, Ryan, was on FHA, it is expensive money, and a lot of people really don't understand that. And how do you differentiate between, the buyer that should go FHA versus a buyer that maybe needs to have a different direction, conventional, or pay their mortgage insurance up front or something like that? What is that distinction for you?
Yeah, great question. So it really doesn't come down to, in my opinion, the amount of money they need to come in at a close as a down payment. So I don't look at this as, hey, FHA is so much better because it's only 3.5% down as opposed to 5%. FHA is great because it's very liberal when it comes to credit scores and job history. Okay. And the third one is going to be the fact that a family member can gift the entire down payment. And so the buyer can technically come in with nothing of their own money out of pocket, or which is not true for conventional. Conventional is great with 3 to 5% down if someone's been in their job or in their industry for 2 years, they have credit scores over 700, and they have their own money that they've saved up for the down payment. So usually those are the distinctions. It's a lot of times it's credit, down payment, and job history.
So is FHA, I know they have their credit, they have a lower credit tolerance than the conventional loan, but is that true? Because I think I've found that that's not, what they post isn't always accurate. In other words, their minimum, what is it, 550 or something like that?
No, usually it's about 620.
620. So is it true that you can actually get one done at 620, or is it really they prefer your credit a little higher?
Yeah, well, lenders always prefer your credit to be higher. So credit scoring is going to be one indicator. Okay, so 620, you can get it done, but it's also your credit history. what kind of open collections do you have? What kind of late payments do you have on maybe other mortgages you've had in the past? Do you have short sales, bankruptcies, foreclosures on your record? Those are the kind of things that are going to come into play when you look at your overall credit position.
So as an agent, how do I kind of help know if this is going to be a qualified buyer to
Either get
in my car?
Either get your mortgage license and do it every single day, or find somebody to help them understand. I mean, I think that's the hard part. Is some people people try to wear so many hats. I know in the mortgage business, a lot of people started to get into almost like the investment business. We're like, well, we're gonna help you do this with your equity, then we'll buy houses, or we'll put money into your 401k, or we'll put money in all these different things. It was real common practice. I think the same thing is kind of true in real estate when people are, you can only be an expert in so many different pieces, and I think there's just it's impossible for you to. Quite frankly, unless you're going to pull their credit and learn guidelines, I don't think you could.
There is an initial education piece you can take your buyers down, okay? And this is what I tell buyers every time I talk to them. I always have a 5 to 10 minute consultation to get to know each other a little bit before we take that next step and have a formal meeting. I tell buyers all the time there's always 3 things that lenders look for. Okay? And this is kind of what agents can say to their buyers as well. Lenders look for credit score and credit history. Do you have a job? How long have you been at your job, and how much money do you make? And third, how much money do you have saved up? And of the money you have saved up, how much do you want to use as a down payment? Your strength in those 3 categories will determine programs that are available and interest rates available. So that's how I do it. And a lot of times when I go over that, that's almost a screening process for somebody to tell me, oh, number 1 on the credit one, well, I had a foreclosure 12 months ago. Is that going to be a problem? And this is the red flag that we want to tackle and go into more detail on.
And this is why it's important, I think, for a buyer to get involved in that process early, because sometimes that stuff takes time, doesn't it?
Absolutely. So a lot of times we meet with buyers who say, well, I'm not ready to have my credit report pulled. I'm not ready to have a formal consultation. I'm not buying for 6 months. And I always encourage people, I say, whether you're looking to buy in 30 days, 60 days, or not for the next 12 months, is sit down, at least at minimum, have a consultation, review your credit. So if there's anything we need to fix, that we do it today as opposed to 30 days before you plan to buy. 40 to 45% of all credit reports have some kind of error on them that people don't know about. So if we can fix those things up front, get a good savings plan in place, pay off the right debt versus not paying off debt, get a little more job security, all those things we can do to put them in a better position to buy is a good thing up front as opposed to later.
One of the other tough things that I deal with often, in fact, I had one happen in December with a major bank in the area where I encouraged the buyer not to use this bank, but they chose to anyway because they had a nice program for union people. And ended up being 3 weeks late and almost lost the deal, cost the buyer more money. Is there a way to kind of educate buyers against, educate them about the industry and how a lot of promises just go unfulfilled, and it isn't always what it appears to be?
It really is. And a lot of that really comes down to marketing. It's amazing. You can say that this is a program designed for people who are union workers. So they say, well, that's me. And they go in that direction without really saying, okay, is there a true benefit there? One of my best friends in the world is a police officer. And when he bought his first house 10 years ago, he goes, man, I don't know if you can compete with what I got here. I'm a police officer and I have access to this police officer loan program. It's nothing unique and nothing different. It's all marketing. So I think getting multiple opinions and reaching out to people like your real estate agent and getting who their trusted referral is, because real estate agents, most have been in the business a long time. They have great relationships. Meet with that lender, truly understand what options are available, and then make your decision from there. And not think because somebody is promoting a first-time home buyer program, a zero-down program, a union program, or anything else that's going to be the best way to go. Everybody's selling the same stuff, so it's all marketing.
One of the things that's important for me is always to have somebody local too. I'll tell you what, I can just rattle off bank after bank that you're dealing with a call center out of state, and the processor's in a different state, and the documents come out of another state, and the underwriter's in another state. And it's miserable because they could care less what I think, who I am. They know they'll probably never deal with me again.
Yeah.
And unfortunately, the buyer doesn't always get that. But that's one of the things that I hear agents talk a lot about is local, reps.
There's a lack of accountability, I think, with some of the bigger banks and getting done. Guys, we do have to go to break. We're over our minutes here, so we got to go to our commercials. But thanks so much for making my job easy. You guys carried that whole conversation. We'll be right back after this break.